2025 has been a defining year for SoFi Technologies. SoFi, a fintech company that has captured the attention of both retail investors and institutional watchers. On one side, the headlines shout growth. SoFi is rapidly expanding its team, adding 225 new jobs in Charlotte, North Carolina, alongside another 250 positions in Bali, with local authorities even approving incentives to support this surge. The company is not just hiring, it's building a foundation for its next phase, signaling ambition beyond typical fintech operations. On the product front, SoFi has been equally bold. The smart card has gained traction among members seeking integrated financial tools, while the launch of SoFi USD, a fully reserved US dollar stablecoin issued by SoFi Bank, marks a clear step into digital currency innovation. These moves demonstrate a strategy to blend traditional banking services with cutting-edge fintech solutions, offering cross-platform utility that few competitors match. Yet, amid the excitement, Wall Street maintains a cautious stance. Analysts are debating growth, sustainability, insiders are occasionally selling shares, and some investors question whether recent milestones reflect genuine momentum or just short-term hype. This tension, the clash between market enthusiasm and critical scrutiny, sets the stage for understanding SoFi's unique position in the financial landscape. It's a company at a crossroads where optimism meets skepticism, and the next moves could define whether SoFi is seen as a breakout fintech powerhouse or a momentary story of hype. Critics of SoFi often point to four main concerns: slowing growth, insider stock sales, analyst downgrades, and share dilution. At first glance, these arguments might sound alarming, but the reality tells a more nuanced story. While it's true that revenue growth showed a slight dip in the last quarter, SoFi's overall membership expansion remains at record levels, and cross-selling of financial products continues to accelerate. A temporary slowdown in one metric does not erase multi-year growth trends. Insider selling frequently fuels fear among investors. Yet a closer look at recent transactions reveals a different picture. Most sales, including those by executives like Anthony No, Kelly Ko, and Chris Lapointe, were primarily triggered by stock bonuses rather than a lack of confidence in the company. Only a small portion of shares were sold on the open market, and many insiders still hold substantial stakes. Noto alone maintains over $21 million in stock, underscoring continued alignment with long-term growth. Dilution also raised eyebrows, but SoFi's recent issuance amounted to less than 5% of total shares, strengthening the balance sheet rather than eroding value. When it comes to earnings surprises, history leans heavily in SoFi's favor. Nearly every quarter since 2021 has exceeded expectations, both in revenue and EPs, even when analysts anticipated slower performance. By separating perception from reality, it becomes clear that the so-called red flags are often overblown, setting the stage to understand how SoFi's business model truly drives revenue and growth. At its core, SoFi operates like a modern financial ecosystem, weaving together multiple revenue streams that complement each other. The foundation is its member base, which has grown faster than ever in 2025. Each member isn't just a user, they're a gateway to multiple products, from student and personal loans to investment accounts and insurance offerings. Think of it as a digital financial mall. The more services a member explores, the more revenue SoFi captures. Lending remains a significant engine, with interest income from personal and student loans providing predictable cash flow. Meanwhile, SoFi's investing platform allows members to trade stocks, ETFs, and crypto, generating transaction fees while also deepening engagement. The company's subscription-based services, including premium tools and educational resources, provide recurring revenue and higher margins, balancing the variable nature of lending and trading income. Cross-selling is where SoFi truly shines. By offering multiple products under one roof, the company maximizes lifetime value per member, turning new users into multi-product clients. This strategy is reflected in adjusted net revenue, where contributions from investing, lending, and subscriptions increasingly stack up to record highs. By blending these segments seamlessly, SoFi creates a self-reinforcing growth loop, where acquiring a new member has ripple effects across lending, investing, and financial products, setting the stage for both revenue expansion and deeper market penetration. SoFi's Q3 2025 results tell a story of sustained growth, even amid the cautious whispers from some corners of Wall Street. Membership expansion reached all-time highs, with new accounts growing faster than in any previous quarter. Each new member not only boosts revenue directly, but also amplifies cross-selling opportunities across loans, investing, and subscriptions, driving a compounding effect on overall profitability. Revenue trends remained robust, with Q3 topping previous records despite a modest dip in contribution margin from the core lending platform. This was offset by strong performance in other segments, including investing and subscription services, which collectively pushed adjusted net revenue and adjusted EBITDA toward new highs. Analysts may have lowered short-term EPS expectations, factoring in rising operating costs and slightly slower tech platform growth. But history tells a different story. Every quarter since 2021 has delivered revenue or EPS above forecasts, often by significant margins. Looking at the numbers visually, charting membership growth against revenue and EBITDA reveals a clear multi-year trajectory pointing upward. Even temporary dips in contribution margin are dwarfed by the cumulative gains from cross-selling and product diversification. Adjusted EBITDA margins are trending positively as operational efficiencies scale, reinforcing SoFi's ability to turn expanding member numbers into tangible profits. For Stockwatch daily viewers, the takeaway is clear. Short-term analyst adjustments or minor quarterly fluctuations do not negate the larger growth story. SoFi is building a resilient, multi-stream business that continues to surprise the market, laying the foundation for potential record-setting performance in 2026. The digital banking sector is expanding rapidly, with the U.S. market alone projected to reach hundreds of billions in transaction volume and lending opportunities over the next several years. Within this landscape, SoFi has carved out a distinctive position, combining lending, investing, and subscription-based financial services under one platform. Unlike single-product competitors, SoFi benefits from a network effect. Every new member potentially engages with multiple products, boosting lifetime value and creating a self-reinforcing growth loop. Despite this, Wall Street often undervalues companies like SoFi, focusing on near-term EPS fluctuations or minor growth slowdowns. When viewed through a longer lens, SoFi's cross-selling strategy and multi-set revenue streams suggest far more upside than many short-term forecasts imply. Historical data reinforces this point. Revenue and EPS consistently outpace expectations, demonstrating resilience against analyst skepticism. Valuation metrics may appear stretched compared to traditional banks, but conventional measures can be misleading in Fintech. SoFi isn't just lending money, it's monetizing member engagement, innovative products, and strategic partnerships. This positions the company to capture a growing share of a massive digital financial market while scaling efficiently. For investors willing to look beyond immediate headlines, SoFi's market opportunity is compelling. The combination of size, product, breadth, and engagement-driven revenue growth paints a picture of long-term potential that contrasts sharply with the cautious short-term narratives dominating some analyst reports. SoFi is laying the groundwork for what could be a transformative 2026, and the signs are hard to ignore. The company has rapid hiring initiatives, 225 new positions in Charlotte and another 250 in Valentine are more than just headcount increases. They reflect a strategic effort to scale operations, enhance customer support, and accelerate product development. County's approval of incentives for SoFi's expansion highlights local confidence in the company's growth trajectory and provides tangible support for long-term scaling. On the product front, SoFi continues to innovate. The smart card offers a seamless financial experience. While the SoFi USD stablecoin positions the company at the forefront of digital currency adoption, these launches aren't isolated events. They fit into a broader cross-selling strategy designed to deepen member engagement and increase lifetime value per user. Every new product adds a potential revenue stream, reinforcing the ecosystem effect that makes SoFi's business model unique. Institutional confidence is also rising. Firms like Kessler Investment Group and Orient Private Wealth have increased their SoFi holdings, with institutional ownership reaching all-time highs in December 2025. These investments signal belief in SoFi's long-term strategy, providing both capital stability and market validation. Taken together, hiring, product innovation, partnerships, and institutional support, these catalysts suggest SoFi is preparing for a major scaling phase in 2026, setting the stage for record-adjusted revenues and continued expansion across multiple financial segments. While SoFi shows significant promise, investors should weigh several potential risks before diving in. Growth, though impressive, has shown signs of moderation in certain quarters, particularly within technology platform adoption. A slower ramp in platform engagement could temporarily affect revenue momentum, highlighting the importance of sustained member acquisition and product uptake. Operating expenses are another factor to monitor. Rapid expansion, hiring hundreds of employees across multiple locations and launching new products like the smart card and SoFi USD naturally increases costs. If revenue growth doesn't scale proportionally, profit margins could face short-term pressure affecting adjusted EBITDA trends. The company's tech infrastructure, while robust, must continue to evolve to handle increasing transaction volumes and diverse product offerings. Any lapses or scalability issues could impact user experience and growth. Finally, regulatory oversight in fintech is intensifying. As SoFi expands its banking services and ventures into stablecoins, compliance risks and evolving rules could influence operations or delay new initiatives. For cautious investors, these red flags serve as a reminder that SoFi's upside comes with challenges. Understanding both the opportunities and the risks is critical to making informed decisions, balancing optimism with a grounded perspective. SoFi is best suited for growth-oriented investors who believe in the long-term potential of fintech and are comfortable with some volatility along the way, those attracted to companies that combine innovative products. A rapidly expanding member base and multiple revenue streams will likely find SoFi compelling. Historical trends, including consistent EPs, beats, and robust membership growth, underscore the company's ability to deliver beyond expectations. Cross-selling success, record-setting adjusted revenue, and strategic expansions both in hiring and product launches highlight the tangible ways SoFi is scaling its ecosystem. At the same time, short-term risks like slowing platform growth, operational expenses, and regulatory pressures remain, providing a balanced view for investors. For Stockwatch Daily viewers, the central question lingers: with all these growth engines firing, is SoFi poised to be the next fintech breakout of 2026, or should caution guide your approach? The answer may depend on your investment horizon and appetite for innovation-driven growth.